Tudo, China's second biggest video website, went on the US stock markets yesterday. It listed there at $25.11 a share. That's about 13% lower than its IPO price of $29. Now, there are some analysts who are saying that, look, there is the global financial turmoil we've seen over the last fortnight or 10 days. Is this really the right time to be listing? Natalie Carney explains.
11 IPOs were postponed last week alone due to volatility in global markets. Yet this didn't seem to affect one of China's largest internet companies from entering the U.S. market.
On behalf to those management team, board of directors, and employees, we are grateful for the opportunity to be here and to ring the closing bells to commemorate our successful listing on the Nasdaq stock market.
The Shanghai-based company hopes to raise as much as $180 million from the offering of 6 million American depository shares, which opened at $25.11 each.
They are showing strength by being able to do their offering in this market because a lot of offerings have been canceled.
James Baxter has been covering Wall Street from a legal standpoint for more than 40 years and says it's essential for companies to be transparent.
In order to go public, you have to be committed to be completely open as far as everything that goes on in the company or with the management. And companies in China that are properly prepared and committed to that can be very successful here.
Tudo was to go public last year, yet internal issues saw those plans stalled. Now resolved, Benjamin Wei, the president of New York Global Group, a private equity firm specialized in China-related projects, thinks it's a good time despite global economic conditions.
It's a right time that Tudo needs the funding to proceed. I think it's driven by the funding needs rather than market conditions. Stocks go up, stocks come down. So over long term, a fundamentally strong company can do well.
And boy, did those stocks come down on their debut day on Wall Street. The company is tapping the public market for cash to finance technology upgrades, bandwidth expansion, and rights to videos. According to the company filing, it has accumulated losses of $179 million since it launched in 2005. However, annual revenue has surged, as have visitors to the site. It now sees around 200 million unique visitors monthly. Yet, it still logs on second to main rival Youku.com, who went public in the U.S. last year, surging more than 161% on their first day. Since the internet company has seen their share prices increase almost threefold to close this session at $27. However, Tudo, as you can see, didn't fare as well.
I really think at this point that there's not much they can do because once the deal is launched, you have a 30-day quiet period. Management can't state anything the research analysts cannot cover. So in the near term, I think the stock is going to trade exactly where the market is supposed to be trading for the sector, China-based internet names like Youku, for example. If market conditions worsen, like Dow Jones, for example, is down a little bit this morning, Tudo may not trade well. But if the market starts recovering, start going well, I think Tudo will trade just as well as Youku over time. Pretty much you can watch this two like trading in parity. That's quite a possibility.
Yet for U.S.-traded Chinese companies in particular, concerns exceed market volatility after reported accounting problems with some were discovered. But for Tudo, there is hope that the confidence demonstrated by launching during these rough economic times will be reflected in investors' choices going forward. Natalie Carney for CCTV in New York.